And of course, I wanted to close with the history, a chart from war versus the full history of investing. And this is from a blog from the CFA. And what we see, I've drawn green boxes around what I wanted to show, which is the full history of their sample from 26 to 2013. They show 10% return on large cap stocks. The way they drew all war periods, they actually showed that war was good for stocks. I don't agree with that. I wanted to put this here to show just how you can make the data fit your narrative, and also when you have to decide what data do you include. Well, they didn't include anything after 2001. That would actually probably bias your sample up. They didn't include World War I, which after there was some market closure for a few months, and then market rallied pretty strong. So it's difficult to decide in your sample, what do we include if we want to see history of how you've performed. But the way they did it and the way they drew up their periods, they showed it was better. Well, we can look at a different example from, we already talked about Jeremy Schwartz and Jeremy Siegel. In their book, Stocks for the Long Run, they said that the period of war and peacetime is actually the exact same nominal returns. The real returns, however, during war are lower because inflation's higher during war. And that's really what you'd expect.
Right. Whenever you're in that position, governments are going to be accommodative. They're going to have a larger impact on the economy. You would see inflation. I also agree with you that I don't think building things to just blow them up are necessarily good for the long-term economy. But what this tells us is don't go to cash. Right. Just stay invested, because at the end of the day, you're going to get a better return for your portfolio over the long term.
When you're looking at data that can be changed so much by changing your start dates for your work, your start date at the beginning or the end date, and your sample changes by that much, we look at it and say, it's just like trading. You have to get those small periods right, or it's going to make a large change. So our conclusion, no matter who you look at through these data providers, is stay invested, hedge a little bit. We have small hedges that are already in place. Don't think we need to add to them at this time.
Right, and the thing that I've learned over time is you're never going to open up the Wall Street Journal and say, hey, everything's great, you should invest. It's always going to be a headline of what to be concerned about. War is just another headline to be concerned, but you invest anyways. That's actually what gives you good returns long term, is that uncertainty, because there's always some issue to be bearish about in the economy.